Well, welcome back to another edition of Commodity Chat from Pit Trader PhD. I'm head of market content, Dawson Schmidt. Joining me again for a conversation this week to talk about the markets is Ag Market Advisor Nick Lawrence.
Hello, everyone.
Well, Nick, kind of to kick things off here, I think to start, I mean, we want to start with exports, talk a little bit about crop progress, a little bit about the same stuff that we've been, you know, kind of watching evolve here as the weeks have gone on, as the months have gone on. Of course, finishing this conversation with the cattle on feed report that we had teased last week, and actually seeing what happened there with what the USDA is essentially saying is going on in U.S. feedlots here moving forward. But wanted to start this conversation off on the export side of things. Of course, you brought this up. I was out on late last week, so I didn't really get to see these when the numbers first came out. But you know, you mentioned that there is a nice rebound in the grain export sales, at least actually not just grains, but the whole oilseed market, as well as some cotton that went on last week.
Yeah, who knows exactly, when these sales were placed and ordered, but yeah, I think the market got spooked a couple weeks ago from um, a noticeable pullback in sales, and I think it kind of worried the market that uh, being up near the upper end of the trading range, essentially for the year, that um, that was discouraging sales, but sure enough, last week we huge. Well, I don't know. Huge probably isn't too dramatic, but very large increase week over week, across essentially everything, all the ags, corn, soybeans, wheat, cotton. Um, Nice turnaround to show that hey, we can still make sales up there. And then, I'll let you rattle through some numbers here in a second, but um, I mean, you got to imagine, with this pullback so far this week, hopefully, over the next couple weeks, we can continue to see strong sales. I mean, the sales have really been, especially with corn, wheat, and cotton as of kind of the first of the year. The demand part of the balance sheet has been the strength, not just production issues, and you like to see that for rallies that may or may not go on, whether it's something counter seasonal, later in the summer or kind of post fall, whatever it may be. You like seeing this big buildup in demand.
Yeah, you and I sure do like those demand-led rallies because, yeah, what we saw with what was it this fall of 24, corn had a good demand story, and that's kind of what kept things
Yep.
pumping for a little bit longer than our typical summer supply risk rallies. But yeah, you mentioned big week on the corn sales side, just rattling off some numbers here. You know, the old crop 2025 sales hit 2.15 or 2.13 million metric tons. That was about a little bit or almost about a 2 month high for just the new crops or the old crop sales alone. New crop sales came at 281,400 metric tons. Decent print there. Overall, the corn new crop sales have kind of been a little bit slower year over year. You know, it would have been nice to see those kind of continue at a strong pace as the old crop has. But, you look at total commitments for the current marketing year, we're still running about 26% ahead of last year. And as you can see from this graphic, well on pace to meet the USDA's current export target. So yeah, really positive week for the corn, especially. You look at the soybean numbers, though. You mentioned, yeah, a fairly strong week for that old crop. Um, not massive relative to early in the season, but this is the type of season where we start to see a little bit of a lull. So, I mean, we had a 3 to 4 week high of soybean sales at 351,000 metric tons, as well as some new crop sales of 173,000 metric tons, believed to unknown destinations as well as Mexico. Not sure if those unknowns are going to come up as China, but again, some decent sales for that week during our typical seasonal lull.
Yeah, just real quick, yeah, soybean sales obviously aren't, through the roof or, noticeably higher, obviously, compared to last year, but I think that's baked into the cake. I think just the bump, competing with the domestic crush margins, um, and giving it, somewhat counter seasonal to get an improvement in sales, I think is what's noticeable to me on the soybean side.
Yeah, definitely. Wanting to move on though to wheat again, not a huge bump up there, but we got a 3 week high. Again, we're hitting our seasonal lull on the old crop wheat side of things. We still came in with about 166,000 metric tons. New crop sales almost matched that 131,000 metric tons. So I mean, we're doing pretty good on the new crop side of things. We're not like tracking well below the 5 year average, but again, it would be nice to see some demand continue on that one. And I mean, you look at the current marketing year, we're already on pace to be over the USDA's current estimate, even after they increased it by 10 million bushels in the last WASDE report. So I don't know if they would come in with a higher increase. They are kind of notorious for not necessarily finishing out that demand side of the balance sheet of, reconciling of, hey, we slightly missed it slash we are slightly over it. So be curious to see if they raise that up and further tighten up that balance sheet.
It's just interesting, like on wheat, the fact that we've been able to, like, we started off strong, post harvest last year, kind of trailed off that blistering pace
Hmm.
most of the winter, or at least all through the fall, and then it re-picked back up. And why? Like, there's allegedly plenty of wheat around the world, Russia, EU, south of the equator, everything. Is allegedly plenty of wheat around the world. You just don't need the wheat, et cetera, et cetera. Um, and and then you've got what's kind of going on with our domestic um, uh, sales. And then obviously there's no secret to what's going on with the supply situation. So um, I don't know. I find that to be supportive. I'm going to keep it in the back of my mind here as we move forward. Obviously, we're getting ready to, potentially run into some hedging pressure. Um, kind of getting ready to get harvest started here, but for the most part, um, we're using up a lot of the supplies we have, and then not kind of backfill those very well. I think on this new crop, I think just something to keep in the back of our mind.
Yeah, I'm interested to see how it's going to develop because right now we're very high compared to other countries on a FOB
Well, we keep selling
Yeah, yeah,
it. So
but
that's my whole point.
that's the thing. Like, yeah, can merchandisers here in the U.S. keep doing their job very efficiently to kind of keep that product moving? Even as to your point, yeah, there's plenty of supplies in Argentina, Australia, Russia. That's kind of getting moved around the globe. But I mean, demand itself has been increasing for wheat, so we could definitely see that.
Yeah, and you can see just okay, and then just in price action, just go off like there's the Chicago, for example, or even to some extent, KC. Um, kind of had a little bit of a volatility. It kind of picked up over the past couple of weeks. We're retracing a little bit more of previous up waves or impulse moves than what you really would like to see in an uptrend. So it definitely feels like profit taking is in full full force, plus hedging pressure potentially. Um, and so like all that kind of supply side bullishness, I think is or was baked into the cake. Now a lot of that, that's coming out. Um, and so it'll be interesting to see over the next, I don't know, 0 to 60, maybe 90 days. You see, if we can kind of build up a little bit of a base and then kind of see what happens with, do our exports continue to stay strong, especially on a pullback? And then are the supplies there and those types of things? And then obviously all the plant back issues in the southern hemisphere and all that. So I don't think that, the trying to analyze what this wheat market's going to do, it's not over yet, is what I'm trying to say. There's still plenty
Yeah.
of meat left on the bone to analyze here and try to discern where we're going.
Yep. I mean, you look at wheat commitments, we're still running about 16% ahead of last year. I think exports are more so about 10% ahead of last year, but still a positive picture. To kind of monitor that moving forward, especially as we switch to the new crop year. Um, Here in just next week, I guess. But we're not going to see the first of the month or the first of the season until 2 weeks from now. But we kind of got an idea that we're kind of lagging a little bit behind on the new crop sales. Would like to see that pick up. Wanting to finish off the on the cotton side of things, this was a big week, I think, for cotton. This
The
is
big one.
this is
Yeah.
combined sales. So this
Yep.
is this is current marketing year and new marketing year. Um, I think this is just one good way to look at it in terms of just overall demand because it still holds a little bit of seasonality within it. Is that old crop sales last week came at 131,800 bales, which on itself is not like the largest number for a given season, but you put it in with those new crop sales of 216,000 bales. That was a big week for here in May. I mean, you would almost say that this is kind of maybe an early start to kind of that late season push that we get for our cotton sales, and or is this maybe a little bit of a, I guess, reversal from hitting some marketing year lows last week as well? So I don't know. I think we need to see more if this is continuing or if this is just kind of a blip in the system.
Yeah, I mean that's it's a hell of a blip. It's just interesting that um, sales would come in like this, kind of, I guess, randomly. I don't know if there's something else out there incentivizing this.
I mean, you look at all those other spikes that we saw; those kind of happened during typical periods. This one did not, to your point.
Right, exactly.
Yep.
That's what I mean. It's a hell of a blip, is what I'm trying to say. It is curious why that business came in there like it did, and how it did. Could there be something going on that we don't necessarily know about, or is it just a blip?
Mhm.
Is it just somebody securing a bunch of needs and then we're going to turn off dry again? That's something to kind of watch there. Either way, good to see. Um, and hopefully, we can continue to use it up.
All right. So we talked about the demand side of things. Let's talk about supply side of things. I only have the corn planting progress that we got from the USDA this last week. We have all of them. I only threw the corn one up here because is kind of indicative of what's going on for both corn and soybeans. Is that the USDA said that 86% of the U.S. corn crop was planted as of last week. That's pretty much on par with the 5-year average as well as last year's pace. What I did think was kind of interesting was, emergence is actually a little bit behind pace. And, I think a lot of that had to do with, we just didn't have a lot of solar hitting the crop on upon emergence. And so emergence just might be a little bit slow. But, we're talking to Eric Snodgrass this week and, it's
We're on
supposed to
catch
heat
up.
up a little
We're
bit.
on catch up.
Yeah.
Yeah.
So get some heat units in there.
Yeah.
And
The planning progress there, is just at this point, there's no worries on whether it's going to get planted or not. It's there.
mhm.
And we have plenty of moisture. In fact, probably too much through that I-70 corridor to get the crop germinated. It could be some issues up through, parts of the plains, northern plains, that type of thing. But I think even them getting moisture uh, from who all I've talked to. And then, yeah, obviously, just lack of heat units to get things really up and going. But I mean, yeah, it's getting ready to catch up.
It's going to pop.
It's gonna pop. So you're
uh,
about to listen to it grow, I think.
but yeah, I mean, the thing to, I guess, kind of be having our eyes open out for, of course, is kind of looking at the precipitation right now. To your point, we had good precipitation. If you look at a 7-day observation map or observation anomaly map, the last 7 days look pretty good for a large portion of the Corn Belt. So I guess moving forward here is, we have a map here, and that we talked to Eric Snodgrass about that. Um, in our weekly weather interview too, is that we're looking at some drier weather for much of the Corn Belt, much of the Midwest in general and plains over the next 2 weeks or so, at least over the next week until some maybe better chances of precipitation coming in week 2. But yeah, I mean, there's this big ridge pattern that's going on in the middle of the U.S. And I think the question is, and he's even trying to draw that question up too is how long does this stick around? And I think, that's maybe the next thing to, kind of have our eyes on as we kind of, get through these early stages of crop development here.
Yeah, again, for right now, it just there's enough moisture in the ground for the most part, broadly speaking, that it's just not a problem.
Yep.
There's enough moisture in the ground to get those roots down and going. Any post emerge spraying activity that needs to be done, there's going to be ample window. Anybody that does side dress or anything like that, there's going to be ample windows. There's going to be to really take care of that crop and do things right. I just temperatures, even though um, obviously it's going to warm up in summertime, and the temperatures we have are very average summer temperatures, right? We're not talking
Mhm.
about anything, and for the most part across the Corn Belt, that's going to be 95 and above consistently, or something crazy to where we're scorching things, right? We're talking about mid to low 80s across a lot of us, so that's perfect, absolutely perfect. So for right now, just zero warning signs from what I can tell on the production side.
Yeah, definitely. I mean, you kind of compare this, people
And
are,
we're still, hold on, sorry, and we're still in full fledged like transition to El Nino, correct?
yep,
Yeah.
and that's
So
what I was going to bring up, is that looking at um El Nino too. And this was, he's kind of worried that, Eric's kind of worried that too, is this kind of mirroring 2023. 2023, we had pretty good precipitation in the first half of May, then kind of all of, like towards the end of May and into June, it really shut off. And precipitation rankings were very, very low for some key areas in the Midwest. But 2023 as a whole, we still came out with a halfway decent crop.
yeah.
And that's just something to keep in mind that, yeah, we're going to be, drier here for the short term, but, can things kind of ramp back up and just get us the timely rains that we need? And, as our crops become more resilient just with genetics over the years, they can probably take a little bit of this.
All right, man. So the kicker from last week, kettle and feed. Yeah, like you said, you're out of the office. I text you something like, "Whew, heavy."
Yeah.
Placements at 106 versus like a 103 expected. Just overall on the surface,
Hmm.
bearish cattle on feed. Obviously, but you put some of those numbers in context of just versus last year. Maybe it's not that bad. Those types of things. Well, why don't you tell the people kind of some of the digging you did and a little bit of your take on that placements number essentially.
Yeah, I mean, so just, the headline numbers, if you just read them off really quick, the cattle inventory as of May 1st was up about 1.5% year over year, 1.4% year over year at 11.6 million head. That compared to you know, that was heavier than what the Bloomberg average was. And then, yeah, your feedlot placements up 5.5% year over year at 1.7 million head, versus a 3% increase that was expected by Bloomberg. And, the other thing with that cattle inventory number, that was the first year over year increase in 18 months. Um, but, you look at this graph here, and we've kind of been relatively steady month to month. We've been slightly growing since January, actually slightly growing since December, after we kind of had that our typical seasonal ramp up in 2020 or in the back half of 2025. But you look at this and we're kind of already moving counter seasonal. And, that makes me question, what actually is happening. Is the feedlot herd growing, or are we just not full, or are we just replacing more than what we're actually killing at a faster rate?
Yeah, there's kind of two school. Well, the one in school of thought, kind of everybody always jumps to is drought on the plains, pulling feedlot, feeder cattle forward, that
Mhm.
type of thing. And you can parse out some of the numbers there, I guess, to make that case. But you're kind of looking at the other end, right?
Yeah, I mean, I've been looking at marketings for a while, and you look and see what the marketings have been doing. Is that, marketings in general have been running 10% behind normal. You look at federally inspected cattle slaughter since the beginning of January, or since the new year turned over, those are down about 9% year over year. And so if you kind of just do a comparison between the two, the marketings and the feeder cattle placements, is that our marketings have really been outpacing uh, feedlot placements on a decline basis.
Let's say it's underpacing.
Yeah, sorry, underpacing. Make
Yeah,
sure I say that
yeah,
right.
yeah.
Has pretty much our marketings have dropped at a faster pace than our placements,
So
essentially.
essentially, the market, so the producer side of the market is being incentivized to just basically refill these feedlots in an out and around way by just keeping them on feed potentially slightly longer.
Hmm.
And so they're keeping these cattle back to get them, bigger, etc. Well, I guess there's a plethora of
I
reasons
was to
that
say, is
each
the producer
individual,
want to
yeah,
do that, or is the
right,
packer want to do
whatever, right.
that?
So the market is incentive, which however you slice it, and probably each region, each producer's in a different situation, whatever. But on a macro level, it's incentivizing keeping these cattle on the feedlot longer. And then as we backfill those feedlots with fresh feeder cap supplies, in a month like this, it grew placements
Yeah.
essentially.
Yep. I mean, on it, this next graphic here is just kind of showing that net basis is, you know, uh, 9 out of the last 12 months of these cattle on feed reports, we've actually put more cattle into feedlots than we've taken out of the feedlots and going to market. Part of that is, do you say, is the packer demand just less? Well, it kind of is because they're paying hand over fist, but when you kind of look at demand, you got to look at the price. And, just 2 weeks ago, cash fed cattle prices were a record. And so we're killing 10%, 9 to 10% less cattle compared to last year while hitting new record in prices, essentially.
Yeah.
So so yeah, I mean that's kind of I think the tidbit. So yeah, to your point, we're keeping cattle on feed longer. With corn prices, they were relatively cheap, so that helped kind of pencil things out a little bit better. But you look at, if you even look at cash cattle compared to cash feeder cattle, cash live has been outpacing gains in the feeder cattle market too. So, I mean, I think there's more demand still on the packer side of things than there is maybe even to fill feedlots.
Yeah. So just really, just something to kind of keep in mind or something to watch. I think moving forward, I don't necessarily know if it means too much to us today necessarily. Um, but could be a roundabout way to get more pounds of beef, maybe albeit in slightly smaller numbers on feed. It's just amazing how these markets incentivize stuff like that. So you have to keep watching it.
Yeah, you definitely see that in the um, in average dress weights. Those have been hitting a record, but at the same time, total production is still expected to be the lowest since 2016 because our slaughter rates have just dropped that much. And so, yeah, just something interesting to keep looking at here moving forward. Going to continue to break those down for you. I think we're going to end it right there. Talked about a lot. Continue to keep an eye on exports, weather here, especially over the next couple of weeks to a month. And also seeing how a lot of this cattle market is developing. We're going to keep you informed.
Sounds good.
All right, with that, we'll end it right there. I'm Dawson Schmidt,
And I'm Nick Lawrence.
then Commodity Chat from Trader PhD.